What is happening, everybody? Good morning. Good morning. Good morning. Happy Monday. Arnie in the house. Look at you guys. Ready to roll. Can we get some likes? Can we get some retweets? Like, subscribe, retweet if you got it. I got my boy in the house this morning. Let's see where he's at. Ready, set, boom. Out in
What is
what
up?
is
What is
happening,
up?
man? What is happening? So I put today's what do you call it? Thumbnail as the trap is set. I don't know. What do you think? What do you guys think? Do you think it's a bull? Good morning. Good morning. Do you think it's a bull trap? Do you think it's a bear trap? I think we're gonna find out. I think we're gonna find out. So far,
I think everyone's trapped. I think
morning,
both sides
Ava.
are trapped.
So far, the market's thinking that it's a bull trap. I don't know. I actually don't know. Yes, the beard is money, out of control. So let's do this. I'm gonna pop this slideshow out. Let's see. Ready, set, share screen. What screen is this? 2. There she is. There's the thumbnail. The trap is set. Where does Jason usually stream from? It's at Paper Gains INC. Is the Twitter. I'm sorry. I always say Twitter still. I can't get out of that. It's X here. There it is. I post from there, fam. Right there. So you go to that profile, follow that profile if you don't. Wow. And then M's profile, which I don't have, but you should be following for sure. We have right there. I need to start posting this for you, dude. M's profile right there. So we're both on Twitter Spaces pretty much all day, every day. If you like the YouTubes, if you like to watch some of the stuff in the commentary, look, it's like 24/7 on X. Damn it, on X. But we go hard. How's the Masters, dude? I did have a little reprieve. We had a little reprieve. Dude,
Oh, that was Rory finally
he
got the
got
monkey
it.
off
He
his
got
back,
it.
man.
Everybody was
It was
like,
good to see.
choke artist,
It was
choke
good to see.
artist, choke artist. You know, I'm like, I was kind of rooting for the guy, but you know,
I was too. I wanted him to get the monkey off his back. Plus, it's like general sentiment. It's the same with the market. When everyone's like, "Oh, this is gonna happen," like the opposite normally
yeah. I
happens.
mean, it was. I mean, I don't watch golf like that, but yeah. Now that Robinhood has these prediction markets out there, I did put the golf bets out, and I had Rory early. I had Rory and Scheffler early. And of course the 2 Japanese guys, which that didn't pan out. And then the crew was like Bryson. So I put a little extra bet on Bryson. He was actually doing pretty good. I ended up closing out the Bryson early. I found out, by the way, that golf is just not my thing. It's just not my thing, but it was fun, man. And Rory had a McIlroy had an epic dip by potential. Had an epic dip by potential like 3 days before the last round. But I did find out, if you like Hood, man, Hood is going to be releasing these event contracts left and right. I think they're going to have probably every potential.
Bro, imagine the
So
earnings.
March
Imagine the
Madness,
earnings. They're getting 4 cents a
yeah, it's not
contract
a
on this
lot,
thing.
but March Madness, let me see if they've gotten anything open. March Madness, look, you can bet on God, Fed funds rates, the decision, inflation, the job numbers for April, GDP growth for Q1, gas prices in April. Like, but to think that they're not going to have every major sports betting event for the foreseeable future, I would think would be incorrect guess. But I bet on Justin Rose. Jamie, no. Did you? Proof is in the Discord. I thought you were with McElroy. At last minute, I put a couple thousand contracts on McElroy at like 54
Go.
cents. I had him early and then I closed it. I literally sold the lows. It was really bad, and I was just frustrated. And then I'm like still like rooting for him, but like I'm like give me a dip, and it was like I think like a couple shots before it was over, I got a dip at like 50 something cents, and they closed out at $1. So yay, he made it. But yeah, that's a crazy tournament. But these event contracts, man, they trade like futures. It's wild. The spread was a bit spready for a minute though. But anyways, enough with that, guys. I got a little bit. Here's the recap. So if you're new to this, I wanted Roy to win too. If you're if you're new to this, what we do every Monday, whenever the market's open, is we take a step back and we take a look at what happened last week. I personally don't trade a whole lot on Mondays because I don't really believe whatever I see on Monday. It's more like a continuation. We get a big gap day today, which means that volatility is still pretty high. I will say that I did make a purchase on 2 things last week I bought. So I bought Apple long. It's that might take a while, but I bought it. And I bought this thing called SVIX, which I mean, I think it's a really good trade, but I'm a little concerned watching how it's moving. I don't think it's actually working perfect because the VIX was down like 14% or something like that. And then SVIX, which is supposed to be a 1x inverse, like directly inverse, you would think would be up 13%. It was only up like 7%. So I'm not sure it's really working the way that it says it is. But in terms of headlines, there's basically a couple major ones. Number one, over the weekend, Trump exempts smartphones and other electronics from Chinese tariffs. Who'd have thunk, right? If you read the art of the deal, I guess this is part of the playbook. I did not read it, at least recently. I think I have it somewhere, but I don't remember it. I guess I got to go back to it. But this is in his playbook, apparently. But the thing that the market really wasn't ready for happened on what day was this, Emp? The 30-year bond auction. So Wednesday.
Wednesday? No, Thursday. I can't remember. One of those 2 days. And it went well, actually. The 10-year and the 30-year, both the last 2 auctions
Well,
actually
so
went
they
pretty
went
well,
high, right? So the
all things
10-year
considered.
10-year was on Wednesday, and then the 30-year was on Thursday. But the reason that rates went high for these bond auctions is that China and Japan basically said F you and stepped away, which when there's not enough buyers out there, what happens? They have to increase the yields on the rates for the bonds to entice more buyers. And the bond market shooting up like this is something that is serious issue, right? So if the long bonds, I say long bonds, 10, 20, 30, 30-year bonds go up like this, that's not gonna, then you have like what they call duration risk. And it's really bad for the stock market. And this, I think, it was very choppy, and it was like the oh my god moment. Actually, I got word, I can't validate this, but we just hearsay. Jamie Dimon called the White House, just tell them to stop the tariffs because they're destroying the bond market. So if Japan and China just basically veto the bond auctions, they're some of the largest buyers out there. It
And Jamie Dimon was in a blackout period before earnings and still made 2 public
Yeah,
appearances to speak as well, like, avoiding the earnings talk in a blackout period, but made a point to make 2 public appearances
yeah.
last
So
week.
I think that if you want to be thankful for anybody, I think it's I think thank Jamie for calling the White House.
Oh,
Yeah. I
JD.
mean, he really did. It's wild. But that moment, I think, is when we started to get the headlines, right? And so if that continues, then actually the market's technically going to start to look a lot better. Today, it's pulling back. I actually think that we're probably more in a bear trap right here, right now, to be completely honest. We'll go over some of that stuff. We'll go over some of the internals and technicals. But just again, where we are, if tariffs see, the thing is, if tariffs continued to go on the route that they were going and shit really hit the fan, it could get a lot worse. So it's possible that the bottom's not in. But again, if you're not an ultra active trader like us or like me, and you're not doing this for a living, you're going to be like, this guy is flip flopping up and down, left and right. He actually, here, I just saw a comment come in. This guy, he's gonna think, and whatever, Oscar. I'm not winging anything, but you can think that because you don't trade, obviously, when we do very active all day, every day. You're gonna have to sit there and guess because you got a different job. You can't watch the charts all day like we do, but we watch the charts just like everybody else watches the headlines. But again, this is what we do for a living, and it's not guessing, right? He's Oscar. Okay, he's back. He's backpedaling. Love you back, Oscar. Um, but but yeah, if
Trump is taking questions right now too, by the
oh,
way, live
is he taking
right
cloud
now.
questions? But
Yeah,
here,
he's got,
not
go
to
ahead.
harp on Oscar because if Oscar's a fan, I love you back. But I got a lot of hate, you guys, about like, hey, technicals. Amit calls me on Sunday. He goes, "Should we even do technical Tuesday?" And I'm like, "What?" And he's like, "Because do they even make sense?" And I'm like, "Dude, uh, technicals are the only thing that are making sense to me right now because for sure your fundamental thesis has been put in the trash can long ago when the tariff, like when the trade war basically kicked off. um see, I thought Trump fans were saying this is all 4D chess. I mean, yeah, I actually I think they still are saying that, right, to reduce the bond yields. But the thing is that again, not taking into account that if Japan and China are some of the largest buyers of the US bonds, you need them to continue to participate. So if you if you mess in that arena, it's not good. And that's exactly what Jamie called the White House for. That's, I think, exactly the moment when we started to see Trump actually back off a little bit. And I don't think that's a coincidence at all. So that said, we are technically here from the 4-year presidential cycle count. I'm I will say this, that there's too much technical damage that's been done to say that this is a bull market technically. Now, can a shift in policy move that needle? Yes, it can, right? And so if we have a like the trade war falls apart and or ends, let's say it ends, right? Can we slowly grind higher back into a bull market? I think that's possible. But I think that it's important to understand that Monday, when as I look at this, and I'm gonna stop sharing for a second because I just want to talk for a minute. Monday, if you look at the charts, what I read from the story here, and I might just do it this way, and I'll share this chart. I think we have what we would call like a capitulation low, right? Um, and I think what not I think what we're looking for now is, does this capitulation low solidify? So think about it this way, right? Here's Monday. I'm just gonna make this really clean. I'm gonna take off all my lines and stuff for just a minute. We're drawings. This is Monday morning. So what happens on Sunday? We get all this trade war shenanigans, mom included, and she's like, "This is crap." We How many people do you think made the call over the weekend? Um, how many people do you think made the call over the weekend and said sell it all, right? On their longer term portfolios because we don't trust what's going on. I think that there was a good amount that actually did that. And what we can see in the chart is that this becomes that moment where like it's whoosh downside 481 in the pre-market. All those money managers are following the request of their clients, sell it all because we don't trust anything. But what should have happened if it was going to continue is that this following day's low, so we get a rally, great. So there's no more sellers intraday as we come in, and then it sold off immediately the very following day. But, and this is a big but it doesn't make a new low. And then we continue to rally from there. So this does look like capitulation for now until the next capitulation event. So the question is, if we can bounce, number one, what do we need to hold to solidify a reversal from a technical perspective? And again, this whole time, I'm going to say this, one tweet can throw this TA out the window. We will be live, like watching the charts as it's happening. So I'll know the second that the tweet comes out, and the charts are going to tell me. But if you're not following the charts super in depth, you're kind of like, I don't know, right? But if the warning from JP Morgan to the White House takes heed, right? If they listen, then I think that they understand the severity of the situation, and hopefully we can start to create a base here and use this area as this near-term low, right? Today, this morning, if you're thinking we're gonna, in the middle of this, we're gonna have a lot of whipsaws. Like, volatility here is COVID level volatility. There's no question about that. This is a black swan event. To me, there's no question about that. Meaning, like, this is an event that the market did not have priced in at all. The question now, and was not ready for, the question now is, at Monday's low, and think about it this way, at Monday's low, was that everything all bad is priced in? That's the question. So I think, in terms of, unless we add a new risk to the environment here, all of that kind of like trade war issue, I think, was priced in. Now, if you add something like a bond market, Armageddon, that was not priced in on Monday's low. So if the trade war fears are still peaking or at max capacity, and then you add a second fear to the market, well, then yes, we can go lower. But what does that need to look like? I think right now it's you actually have to pay attention to the bond market. And until then, I think that the market is getting a little bit desensitized to a lot of the Trump tweets, if you will. So so that's where I'm at. I actually think this might be more of a bear trap than a bull trap. And we can go into the technicals to look at that a little bit more, but let me get back to the presentation just a second. And you know what? We don't need to go to the presentation. Let's go ahead and look at the calendar, right? So in terms of this, I was looking for a dead cat bounce, I think 2 months ago, or February, March, late March. Hopefully dead cat bounce. That was called early when the trade war really kicked off. We got about halfway into the bounce that I was looking for, and then it sold off, right? The last trade war that we've had, actually, we can look back to the charts on October 2018, I think it was. That was the last trade war. So, and that one, I think that one bottomed at about a 20% drawdown. So that's where we've hit. I think as long as that remains to be the only issue with the market, it's possible, I might even say probable, that those Monday lows were this low right here. Now, do I think that if Trump says, okay, all deals are met, trade war is over, that we rally to the top, to the highs? I actually don't. Again, because I think that we've been a little desensitized to these tweets. There's some trust issues now, and there's too much technical damage to think that you're completely in the clear. So what does that leave us with? It actually leaves us with a pretty clean, what I would say, tradable range. And hopefully, as long as nothing else jumps up, you could potentially make that rally, but it's going to be a lot faster, I think, this time than you might expect. Okay, so this is just last week's calendar, and then Emp, I'm going to hand it over to you after I do this. So last week, what we got? So we got a consumer credit change. It's a little weird, right? So actually coming in at negative 0.8 billion. Consensus was for 15.2 billion, and the prior was 8.9. So that's a big change. I don't follow this one a whole lot. So, but when I see something that's just so off of what the consensus was, it kind of stands out to me. So this needs to stand out a little bit here. The 3-year note auction Again, yields coming down. It's not the near-term bonds, right? So 2, 3, 2-year bonds is what the Fed controls. They don't control anything else. Eh,
We just got some positive news on Ford and GM from Trump.
there you go. So I
There's a
think that
lot of stuff coming out.
yeah, so there'll be a lot of headlines coming out. And I think that for now, Monday's low last Monday looks like it could hold as like peak fear. If that makes sense. So unless we have a new fear that shows up, I think that's a tradable low, definitively. We got the 10-year again. 10-year started to go up. We got some FOMC minutes, did not move the market at all. CPI came in last week at 1% against a consensus of 3%. Again, it's backwards looking model. These things normally move markets quite a bit, but they're not going to be moving like when when the trade war is front and center and potentially a bond market issue is front and center. Then you know what? Then CPI, PPI is not going to be as impactful as it normally is. But I will say the one thing that I do look at, again, non-farm payrolls that first Friday of every month is just as impactful as it always is, and we'll show you guys exactly how to use it. So again, so we get 4-week, 30-year. That's a more 30-year bond auction. This is the one, right? Previous 4.2, 4.62. To get a move like this in a 30-year bond, not usually something that you see. PPI coming in negative 0.4 versus a consensus of positive 0.2. So this is good. So producer inflation's currently coming down a little bit. The tariffs are not going to hit PPI. They'll hit PPI first. Are not going to hit PPI for a couple months, right? So that's not going to be in, and that's why I think this current inflation reading aren't going to be that big of a deal. Let me see if I can bring this up a little bit. Crash car. Right. So a lot of speeches, a lot of stuff going on. Consumer sentiment. This Friday, coming at 50.8 on a consensus of 54. It's pretty low, right? So this is Friday. We actually had a good Friday setup. This coming Friday, by the way, is close. But I'm gonna hand it off to you, Amp. I'm gonna go ahead and stop this. We'll bring up Amps here right now and take a look at Lux's Catalyst Watch. Again, if you're not following Lux Algo, they do this Catalyst Watch every Sunday, right? Every Sunday.
Every Sunday.
And it kind of gives you.
So Lux Algo at Lux Algo
Yeah.
is right there. You see it on your screen. Follow them for sure. There it is. Now Jason threw it up there as well.
So it's not only the calendar, which we will look at the calendars as well, but a couple other catalysts that you can watch as well that'll move the markets. But go ahead.
Yeah, they always have a great graphic. The two dogs right here. I guess those are poodles. With Jerome Powell trying to balance them out. That's fitting. They always do really well with this. Going into the Catalyst Watch, some find some stuff that maybe missed on some other calendars out there. So like today, the US FTC trial for Meta did begin today. You notice Meta had a little bit of relative weakness this morning. A lot of Fed speak today. 2 of these are after hours. Not really worried about those. We did have Goldman Sachs earnings this morning. And I know Jason's going to talk a little bit more about earnings coming up this week because we really are getting kicked off. A little bit of data tomorrow, import-export stuff. You do have the ECB president, Lagarde, speaking at noon. Fed Cook is after hours, not really that worried about any of that. Earnings tomorrow, Bank of America. You've got Johnson & Johnson, Citibank, after hours, UAL, that's United Airlines. That one's interesting. Wednesday, Jerome Powell, you'll see the first little chili pepper of the week. Jerome Powell speaking. There's not many chili peppers this week, Jason. Actually, that's the good news. If we want some good news, now we still have an infinite amount whenever Trump is speaking any day right now. But as far as like the Fed side of things, the data side of things, it's actually somewhat a quieter week for once. So 20-year auction, you get some retail sells. So I know some people will be watching this. I just wonder, like we saw muted reactions of the data last week. Does anyone really pay that close attention to this, knowing that the tariffs is what really matters right now? So that piece will be interesting. But Jerome Powell speaking, definitely want to keep your eyes on that. The first Sydney name going into semiconductors, ASML, before the open. So this will be, because it's European, this will probably be at like midnight Eastern time. whenever these numbers come out. They obviously come out at their time over there. But ASML is kind of the first semiconductor AI type of play that we're going to get in the tech sector. So definitely worth maybe keeping your eye on that Tuesday night into Wednesday. And then Thursday we're going to get Taiwan Semi. And you see that we even put a chili pepper down here, or the Lux team did, because Taiwan Semi, same story there. Probably going to come out like 8 9 p.m. at night. You never really know with them what time it's going to come out, but definitely expect Wednesday night into Thursday. If you're trading futures, definitely pay attention to this. Taiwan Semi earnings coming out. Also, EU interest rate decision. That one could be a little bit spicy there on Thursday. Of course, weekly jobless claims and some of the at-home data here, Fed bar, and then the big kind of kickoff for a lot of people for earnings season: Netflix.
Netflix.
Netflix Thursday after the close with no market open on Friday. Might
With
I add,
no
as you
market
see
open
down
on
here.
Friday.
You have Good Friday. We do have Fed Daily is going to speak anyway. He said, "I don't care if it's Good Friday. I'm getting my speech in." But
The futures are open Friday, I believe.
I think they are open until noon or
Half
1
day.
Eastern.
Yeah.
I believe they are half day open. So yeah, maybe some opportunity there, something to check out. But Netflix, that's really where we're going to get going. And I don't know about you, Paper, but I'm excited that I don't see near as many chili peppers on here.
There's not.
Um, and we're finally getting into some earnings. I am interested to see what all these CEOs start saying on their conference calls. I mean, how many of them are going to like basically not give guidance and say, "Hey, we don't know what's going to happen right now." But I am interested to hear their commentary and what are they saying? Are they putting pressure on the administration? Are there ongoing talks? Like I think we'll get some little blurbs out of those. But definitely a shout out to Lux Algo. Come for the memes, stay for the alpha. The watch list, like for example, this came out at 6 o'clock my time last night. That's 4 o'clock Eastern. So at Lux Algo, give them a follow. Check out the weekly catalyst. A lot of times they do have little things like we saw the Meta one right here, but a lot of times like last week we had the Walmart shareholder meeting. There's other
Yeah.
little company events that they do really good about getting on here, especially for you options traders. And with that, I'll throw it back over to you, Paper.
I appreciate you, man. I didn't realize that Meta had that antitrust lawsuit right now. There was a time back in the day when there was another antitrust lawsuit. This is like, I want to say like 5 years ago, that really held Meta's price back quite a bit. Um, but I'll just do a quick recap, guys, if you didn't get it. So next week it is a very low week. I think retail sales. If I put this on the calendar, it's housing prices, housing stats, and retail sales. There is nothing going on. Earnings season kicking off really for the tech people with Netflix after the close. But again, Friday is Good Friday. New York session is closed. Only futures are open for a half day. And if you're wondering, there was a headline this morning also about NVIDIA. Shoot, I need to get that. Well, I think I don't have it anymore. But NVIDIA got a deal. Do you remember what it was? What was it, Evan? Or Jesus, Evan, Emp. Oh yeah, announces U.S. made AI. Oh, that was a supercomputer
Yes.
production starting today.
Trump mentioned that a few moments ago in his
Yeah.
diatribe
So
there.
you might still get this guy. It says up to 500 billion of AI infrastructure will be built in the US within the next 4 years. So, I mean, Apple already did the 500 billion announcement. The thing is, like, if you're wondering why would Nvidia, and definitely why would TSM not be like flying right now? So one, you have earnings risk, right? A lot of this stuff is very forward looking. That's 5 years out, right? So the market's not really within the next 4 years. It's not really jumping at these opportunities like they used to, right? Right now, it's very much about the near term. What's going to affect me today, right? What have you done for me lately? And with TSM having earnings on Thursday, maybe that's a little bit of a dip, but I think that Nvidia is being held back at the moment by TSM earnings. So maybe at the end of the week, that might be what we're looking at. And again, there's really nothing much going on in terms of economic data this week. So, that said, there is one like really good, sometimes reliable, sometimes not so reliable. Um, Potential. Let me see. I'm gonna get this up. But anyways, there we go. I got it ready. We're gonna go over to our good friend, Miss Cleo, and everybody's favorite portion. You're waiting very, very patiently. I appreciate you all, but let's get into it. Here we go. All right, I forgot to share the screen. I'm slow this morning. What's up, Spencer? What's up, guys? Did Amit just like did he close? Everybody over there can come over here. We'll do this one. So every week on Sunday we get this crazy reading. The T in TA stands for tarot, and here we are. You've made it just in time for the wild shenanigans. So what we do, she gives us, Miss Cleo, that is, she gives us a theme card for the week, and every day of the week gets a little a card itself. Now, Friday, we are closed, but I think this is for the futures probably. But the theme card is I don't know, man. This is 3 of Cups. That sounds pretty muted. It feels kind of muted. One thing standing out,
I don't see like absolute death this week
it's
for once on a card. Like I don't see
before
just a
she was
scary
hitting it
card in
hard,
here.
before she was hitting it hard, and it was like death, death, death. I think I saw one of the absolute worst cards I've ever seen, and I don't remember, like I forgot what it was, but it was like really bad. Um, but yeah, welcome again. If you're just tuning in right now, congrats because you have just come into the favorite part of the show. I gotta see where that last card was. It was really bad though. Like 2 weeks ago, she was like, "Ugh." um, but anyways, so this is what we got this week. So I'll tell you, there's a theme popping out. Do you see it? You might not see it. And I'm kind of feeling this. There used to be like when we have gold rallying, there's a lot of yellow on the cards that I tend to see. And this week, I'm actually seeing a lot of silver kind of themes. So maybe there's a hidden message here that silver is going to have the catch up week. I'm long silver. Hi ho. But we'll see. Okay. Anyways, so theme card is the 3 of Cups. That I think is going to be muted. Ace of Swords. I don't really remember this. Queen of Cups. I do. So this one is like you're just getting out of the water kind of thing. Page of Swords. 7 of forgot what that is. Coins. And then the Knight of Swords. So lots of swords, couple cups. 1, 2, 3 swords, big swords. Ace, page, knight, and some cups and some coin. I don't know.
Okay,
I have no idea.
there's a Friday card, and we don't have a Friday market. That's gonna be
But it's
interesting.
open for half day on futures. So we'll give it that. All right. All right.
Yeah, so we're just gonna get sorted to death. Oh boy.
Anyways, so I've enough guessing. Let's see what she says. So the theme card is a 3 of Cups. We have zero data on this card as a theme card.
Oh god.
So once again, she actually has no idea. But it's comedic, right? And very little for the daily version. This means we're flying blind a bit, and we'll have to rely on keywords. This should imply celebration. It was early celebration, right? Stability, I like this word, and financial freedom. If it is a bear trap, which it kind of, I'm just gonna say I'm leaning towards bear trap. That would be really good. It doesn't have to fire off this week, but I think that could be really good. These are all positive traits, which offers a chance of a decent recovery week. However, I worry a bit because this card can also symbolize distraction when it comes to money matters. Well, I think the market's fairly distracted. In either case, 3 is near the beginning and low energy. So we'll see which way the ship is steering and get a small glimpse into its future direction. Okay, so she's kind of on par. I don't think it's the breakout week, but I think it sets up a pretty nice potential base. Monday is the Ace of Swords. That's today. Aces bring a new beginning. If you are looking at the pre-market, you are probably overly ecstatic and a little over your skis. I think that's fair, right? Carrying plenty of energy in order to make it happen. This card skews bullish, and the worst case is usually a flat close. I think that's probably, I don't even know what the charts are saying right now. My guess is to be something like that. So the best way to treat this is buy the dip, is a BTD, buy the dip card that has the potential to trend. So gapped up, huge gap up.
I just bought the dip paper. I just bought it
Did you
right
buy the
before I
dip?
saw this. Let's go.
I think what you can read to this from a technical perspective, if you're going to do it, is that look at that over the weekend gap. If we hold that gap, that's actually pretty good. Some
Just look at your spy chart. What we just did. We literally just filled that gap
some
perfectly.
equities, I will say for sure, or what's the word? Or like some equities have reversed the gap and gone beyond, but who knows? But she's saying it's a buy the dip card that has a potential to trend. We're moving from ace, queen to page to 7 for the first 4 days of the week, which are pretty much all the days. And that could be a positive sign for recovery phase. Interesting. All right. So she's thinking bear trap too. Queen of Cups is tomorrow. This could be an emotional day that brings a feeling of victory. Again, Miss Cleo has no freaking idea. Victory or intense pain. One of the two. In either case, she warns us to stay calm and avoid overindulging in emotions. I couldn't agree more, at least in that last like sentence. No matter what happens, if we gap down on Tuesday or we gap up, I don't think it's a chase day. Tomorrow's not a chase day at all. As Miss Cleo said before, we have a chance to bring continuation from the ace to the queen series, but it's more of a hunch, so she really doesn't know, than anything. There's a very strong chance she trends, and the morning will reveal that direction. Trade momentum after that. So after the open, let it breathe, wait your 30 minutes, 15 minutes, whatever, and then look for momentum continue. Wednesday's the page of sword, 90% chance of mean reversion here. So what does that mean? Does that mean if Tuesday is really green, then we go red on Wednesday? That could kill the series idea. Pages also bring new journeys, which fit with the mean reversion play. Okay. Look for she's never, I just want some clarity, dude. I just want some clarity. Um, the other thing is like it's Easter on Sunday. Like, do you really want to be like dealing with all this shenanigans? Like, or do you just want to like leave and have it be like an epically flat week? That would probably be ideal. Um, Anyways, look for energy quite similar to yesterday's energy, which means that the moves will be similar regardless of direction. So, is she calling a turnaround Wednesday? I don't know. Again, the morning should set the tone. We'll play accordingly after that. Thursday, 7 of Pentacles. This is essentially the Friday. 60% chance of continuation with a small chance of trend. Probably in for a bumpy ride. Usually trends when following a flat day and flat when following a trend day. All right. If the trend is obvious, you can chase it. But otherwise, I see this card as a consolidation card that invites us to look for the next setup. I do think that if we have 3 green days in a row, Monday, Tuesday, Wednesday, this being the third card, oh, no, Tuesday, Wednesday, Thursday, that is a good time to take profits. So if Tuesday, Wednesday, Thursday all green, she's saying take profits Thursday and chill, and come into the Monday flat. Friday, she has the market. Oh, where's my recap? Friday, night is market is closed, but futures will be open. Expect a strong surge overnight. She's
So long
He's
Netflix.
calling a surge.
Long
He's
Netflix
calling a
earnings
Friday trade.
on futures.
Strong surge overnight into the open that gets sold off and flattened out by the afternoon bell. This card is very energetic, so don't fade it. Recap.
I wake up in short. Wait, that didn't make sense. Hold on.
Alright, so the market is
Don't
closed.
don't fade it, but it's gonna get sold off.
Yeah. This is how she does. This is how she does it, dude. She wants to keep her options open. She wants to look good no matter what the scenario is. And I think she's a pro at that. She's really good at that. So, I'm just trying to do the best I can with what she's giving me. But future will be open. Strong surge overnight. Okay, so yeah, Friday, Netflix. Dude, Netflix, by the way, has been extremely resilient, wild. Frankie's saying Netflix is a short. I'm like, we'll see.
Oh, no.
Um, you
But
There's
they
been a
but they don't have
serious
any
drought on
tariffs.
Netflix lately. There's nothing to watch right now. I mean, there's the Gold Show. There's like this balloon popping dating show that popped up on my thing. I'm like, get out of here with this. There's nothing. There's a new Stranger Things coming out tomorrow.
Black Mirror, a new season, Black Mirror just came
Yeah,
out.
dude, I'm not into that. There's no
I like
storyline,
this
dude.
show.
Every freaking episode's different.
That's why I like it, because I have ADHD.
Yeah.
Like, I don't have to remember what happened in the other
Dude, I
episode.
like the binge worthy shows. But anyways, um, so Surge overnight. This is weird. Yeah, that gets flattened out by the afternoon bell. Maybe it's a gap and hold, she's saying, and not try to short the gap. That's probably that sounds like what she's trying to say. Anyways, we have a chance of a great week if the ace can trigger a positive retrace. Well, it was a gap up. Either way, which means that, by the way, if we get a big move, it's in the afternoon today. Either way, there's a lot of energy to play, so be ready. All right. All right. I think she's good. So thank you, Miss Cleo. The spectrum. Oh, dude. Okay. So Jill, Love on the Spectrum is a guilty pleasure. I actually like the show. And did you see the guy got a kiss? The guy got his first kiss. That's how you know I actually watched the show. But it's a guilty pleasure. You probably don't want to tell people that you do love on the spectrum. And this is what I was talking about. So you have a gap up. If you think the markets are normal right now, or you think that things are like, okay, you're just gonna V out and just completely up to the upside, there's a trust issue in the market. Understand that there's a trust issue around the trade war. So to think that we're just gonna boom next month be at the highs and you actually put money behind a trade like that, I think you are like, I don't think that's the right thing to do. I think that the best case scenario is to slowly have the market build a little bit of trust. Um, but yeah, I think what that looks like is you could have these kind of gap days. So this overnight session, by the way, so this is the overnight over the weekend session, right? And we're gonna call this like a session gap. Our gap rules are to not fade the gap necessarily unless you have um uh like a opening range break that starts to correct an imbalance, which we do, right? So like that's this opening low. Sorry, this is my day trading chart, but that's what that looks like. And the gap was filled. So I think the question is, look, if we are going to continue on to the upside after filling this gap at the index level, at what point does that actually happen? So what you do is you grab a little fib tool and you go from the session gap. This is a 1 minute chart, so apologies if you can't look at that, or if you don't. It is what it is. It's what you need to do. It's basically this morning's low right here, 539 spot 25 on SPY. If we're over that by the close, by the end of the day, somewhere in here, if we're over this by the end of the day, I, I think there's a good chance of a rally. It doesn't have to happen though. Could we just completely go sideways for the rest of the day? Absolutely. And if we hold the gap, that's perfectly fine to me. But again, this is why like Mondays, I'm not trading a whole lot because this fading this into the gap is simply a day trade for a couple hours at most, if not 1 hour, and then you have to be done. So unless the market index wise is continuing downside below 534 or whatever this Friday gap was, we're not going down. I'll tell you that much. So if the market's still holding this, you actually want to go with the gap in the direction of the gap, which in this case is up. So a gap has been filled. This is constructive, cautiously optimistic, I think is the right word here. Don't trade for a whole lot, but you go spot to spot, level to level, as always. I did want to do a quick look. So I'm just going to pull this up really quick. So what I have here, so this is just going to take, let's just take SPX so there's no overnight. So this is advanced decline, net flows here. So I have this a little bit out of order. SPX is up here. This is something called the tick. These are market internals. This is net flows, inflows versus outflows. And this is the advanced decline line here. I'm on a 1 minute chart across the board because I want to point a couple things out. So on the tick, right? These things, they're gonna have to make me move to a 5. And I'm gonna have to zoom in here. In the depths so far, at the depths, it's been pretty wild from an internals perspective. And one thing here that's telling me this is like, okay, as we get into some of these moments, so this is last week, let's say Monday, the 17th or the 7th. Look at these opening ticks. So opening ticks here, here's Monday. I think it's a 5-day, 5-minute. Oh, it's a 3-day, 5-minute, whatever. This is 3-day, 5 minutes. So 3 days, 3 trading sessions ago, we were been opening ticks at like negative 1500, like this. So momentum really low, negative 1500. We're opening up positive 1500. These kind of opening prints on at a tick perspective is not normal. So even this day, and then this negative 1300, that's this day right here, negative 1300 tick. This is a big day. This is Wednesday. So Wednesday, you're opening down here, but the tick is opening negative 1300. You really don't see that kind of like intense movement or intense like bid uh it, aside from like COVID, right? So like these are opportunities that the market really has to like completely flush out everything. Wednesday was Wednesday when we got the tariff pivot or tweet. It might be frozen. Was it Wednesday? You guys will tell me if we got the
Wednesday, yeah. Wednesday was
this looks
the
like
good
it.
news.
So Wednesday, you could have been thinking it's over, right? And from a technical perspective, where's my Wednesday? Wednesday's opening setup, opening negative. Oh, this is Thursday. Tuesday. Where's my Wednesday? Yeah, Wednesday opening negative. We got multiple negative 1300 ticks. Wednesday opening here. Watch this. So the net flows on Wednesday. This is Wednesday. Opening negative. With a negative 1500 tick open, just under the zero line, even like this should have Wednesday morning before the tweet came out. Before the tweets come out, Wednesday morning, the bears had every opportunity to completely flush this market. These are ticks like at negative 1,000 pretty much the entire morning, but yet something was going on in the net flows where we weren't just completely selling off. So like what selling off would look like this. This looks like selling off. This is Thursday, selling off. Wednesday, there was every opportunity for the bears just to completely destroy this market, opening a little bit lower, very negative across the board. This is Wednesday's advanced decliners. Again, opens negative, but instantly goes positive before any tweets come out. So before any tweets come out, the market's saying we should have capitulated again. We should have gone lower, but for whatever reason, we've run out of sellers right now, and it actually starts to quickly bounce higher Wednesday morning before any tweets are happening. And again, all of this. So we're looking at this. This is Wednesday. It's like something is not breaking down here, but there was every opportunity for the bears to completely lop the head off of the bulls, but they didn't have the firepower this day in the morning. And then lo and behold, a tweet comes out and pushes everything up. Here's your SPX just rallies to the highs. And then all of a sudden you can see from a tick perspective, you're trending below the zero line. And then boom, Thursday, you start getting these positive 1600 ticks after opening up with a negative 1300 tick. That's not normal. So this is like COVID level volatility. And here's the net flows just like flat, like boom to the upside. Advanced decliners completely in. But again, we open up Thursday and there's this trust issue, right? So everybody that was freaking out on coming into Wednesday, instantly actually sold into Wednesday's rally, thinking that, hey, look, I don't necessarily believe whatever tweets are coming out. So there is that trust issues for sure. And Patrick has definite trust issues still. So anyways, and then Thursday during the day, we can see all of a sudden advanced decliners go from 2,500. Like, when do you see 2,500 positive or negative on ADD? Like, you don't see it aside from COVID, right? Like, unless we were in the middle of the sick, it just didn't show up, right? And so this is just SPY or SPX, but this is how crazy this market is. But the market internals were showing Wednesday, like, look, there was every opportunity for the bears to take a death blow, but they didn't for whatever reason. And we happened to get a tweet that same day. Then Thursday morning, boom. This is what's weird, right? So Thursday morning, here's Thursday, right? Look at these internals. Thursday, the chart looks really bad. We do not breach Wednesday's lows. The net flows are getting really ugly all Thursday, but then the advanced decline line opens super negative 2000 and just hovers there, right? Tick opens up pretty much staying below the zero line down to like 1400 negative on the tick. And then midday starts to pop a little bit over and hold that zero line. And we stop seeing some selling until the very end of the day. But even then, the end of the day, this little push to the upside in net flows, if this is the net flows, I would have expected after a day like this, you would expect the chart to go lower. And this day, Thursday, which was a red day, mind you, I think signals that is like the first solidifying moment from an internals perspective of that quote capitulation low. So seeing the net flows be this negative, right? Seeing advanced decline Thursday hold this negative, but yet price still closing higher is constructive. Then we come into Friday, it's pretty chop, but the market again meaningfully higher. Although net flows there's a slow stutter step. So look at net flows here on Friday, right? Friday starts negative, advanced decline, closes positive, starts negative. Okay, maybe the worst is behind us, and we start to get some more positive ticks here from a volume perspective, and we're pretty close to exactly that right now. So again, not seeing these major rallies to the upside, that I think is ideal. Right now, this is live. Tick is at 800, negative 800, with a low tick of 1350. Even still, volatility is still here. Price coming down a little bit, having held that gap. If we hold around her, and even if we go a little bit lower, but we don't test those Monday lows, I think that's ideal. I'm going to do this really quick. So this is what I'm going to do. And on my timeline, by the way, I have a post that's pinned, right? So a post that's pinned here. I don't actually, if you want to be able to kind of follow what's going on price action wise and actually have something that's tradable from a technical perspective, this is the absolute truth. And this is going to remain the truth for the rest of the month. And this is how it's going to work. And I'm going to outline it from a technical perspective, and you guys can see how it's playing out right now. So my point is, I don't care what headlines say, because there's trust issues in the market. People don't trust Trump or the tweets that much anymore. There's potential, Armageddon in the bond market. So I all I have to trust right now is price action. That's not going to lie to me, no matter what it says. It's going to flip flop very quickly. So if you can't move from second to second, sorry, don't know what to tell you. We will, but price action is going to tell you what's true at any given moment in time. And can that change? Yeah, of course. But what's true right now, I'm going to show you here. So unequivocally true for the rest of the month, right? If we are below, when I referenced Friday, this post was on April 7th. That was the first Friday of the month. That's actually NFP. So I'm talking about non-farm payroll Friday here. If we're below that non-farm payroll Friday lows, we are going down, and you should not be thinking about buying calls at all. I don't care, or even equity, right? If we're below the lows, we are going lower, and we are going to breach that Monday capitulation low, and the low is not in. That's going to be true, right? If we are above Friday's high, so non-farm payroll Friday highs, right, then we are going up. I'll tell you how far up in just a minute, but you should not be thinking about buying puts. And so this is unequivocally true. If we're below Friday's, not this last, but 2 weeks ago, Friday's low, NFP low, then we're going lower. If we're above NFP high, we're going higher. And dips should be bought if we are over that point. We happen to be over that point, and I'll show you exactly what that looks like. In between Friday's range, we are going to chop, and I'll give you a little bit more clarity here on what that means. So I'm just going to look at SPY from backing up here to a daily count. So Friday's high, Friday low, right? Can I take some of these guys off? I'm trying to take some of this. So this is Friday's high, Friday's low. Let me zoom in just a little bit, so you have a little bit more clarity. This is that non-farm payroll high and low right here. And this is the box that we're talking about. So right now, you want to assume that 502 spot 69, this is the same for the Qs, same for SPYs, is going to be epic support as we were coming into that, right? As we are coming in to, come on, replay. And I posted on Twitter a little quick video of exactly how this needed to play out. If we were below, then you would assume that this, so two things. This is major resistance, right? So over here, we're going to call this resistance. And down here, you're going to call this support for now, for the month, the entire month, the rest of the month. That's how it's going to work. This was the real resistance up here. We actually hit that very quickly out of the gate. Boom. This is Monday's capitulation low. Remember, I'm referencing the Friday before the Monday capitulation low. So before Monday came, we already knew that this was going to be resistance. We hit that, instantly rejected. What happened from here is we went and blew past support. If this was capitulatory, like if this was not capitulation low, what we would have seen is we would have seen this pull up, and we would have seen that support turn into resistance. Does this make sense? But the fact that we didn't, and as I move it forward, and we reclaim this level, we happen to get a tweet, right? Then what's still true, this still resistance, this is your real support right here. Now, can you hope that this turns into support, that prior resistance? You can, and that's what you would have needed to see happen. But because as we went forward, it wasn't yet, it was a little early. This is still your support right in here. From a fib perspective, and this is where it got really interesting, as we were looking at this, I think it was from here to here, this pullback right here happened to be a perfect golden retrace of that bounce. If you didn't notice it, you wouldn't have been looking for it. But because we were still holding over that low, my gut, not my gut, but what the system is telling me now is that, look, in here, we should at least chop. Does it make sense? And I believe that's what we did for a time. But this now, this low, I think has been solidified in terms of your tradable low right in here, right? And today we're a little bit off. So what you're looking for today is you're now out of the box. So this is the box, your Friday range. You're out of the box. Any pullback and retest of this Friday high should be buyable. And I'm going to assume in the meantime that as long as this Friday high is holding, then we are going up, and I do not want to be short. Where do I want to be short is if we're below Friday lows. So it's only until I actually get below here that I think this becomes that doomsday moment. We would have to come way down here, come up, and that would have to act as resistance. And right there, this is very far away.
Did we just get news?
We get good news.
Holy. Something just started flying on my screen.
Nice.
Let me see. I'll check onto it while you do
Okay.
this.
So I think this is the setup, and this is crucial. So 526 spot 59, as long as we're over that, I am not thinking that we're gonna go down anymore, right? I am thinking that the biggest like dip buy possible was Thursday. And hopefully, as long as we continue this trajectory and we want to kind of make this a little bit of a channel to the upside, like this, I want that channel to kind of hold. It can look like this and it can chop. And I want to go back into this 200-day and 50-day simple moving average, which is my next area of real resistance. And actually the moment that we broke down from the initial trade war beginning. So if we can if we can erase the trade war headlines, is it logical to think that we can bounce up to the scene of the crime? I think so. And that puts you just under 580. And that could happen in a week or so. But I think that, to think that, so first of all, this becomes your upside target in 578 is 578.55 right here, which comes from this point here, this breakdown, and all of this. So in this area, boom, this is your now overhead real resistance. At that point, I think it's good. It's a good idea to potentially take measures if we get there, right? Um, and I think that we will get there, but that's the next spot that I do want to take measures at. And that's just under 580, just around the 200-day simple moving average. What's probably going to happen is that we actually might go over the 200-day simple moving average. You get all these headlines. Oh, we reclaimed the 200-day and you're back on course. That's not when I want to be complacent, right? Like that's the point where I actually that really big green morning, that's when I want to be cautious. So don't get over your skis in terms of price action. We're coming out of a massive COVID level volatility event, like Volmageddon 2.0 for sure. But what's true and definitively true for the rest of the month is that as long as we're holding over 526 spot 59, we should not be thinking that we're going down anymore. And I'm going to pull this over to where was I? I'm gonna open this up and go over to the index chart, and I'll show you.
Looks like it's just Fed Waller comments right
Oh,
now.
nice.
It's the only news I found.
So that was SPY, and I'm gonna do the same count and take same exercise on Qs. And what you're gonna see on the Qs is it's actually cleaner than SPY was. So when I say Friday, first Friday of the month, Friday high, Friday low, it's and this is what I mean. Like, I don't care what the headlines say. My technicals are not going to lie to me, right? So same thing, right? We bounced. We get this Monday kind of capitulation low. All the families, all the like large funds called and said, "Get out of here. We don't believe it." There were no more sellers in the open market, so we ended up rallying right into that same resistance right here, same exact resistance. Friday high on the Qs. It's crazy how this works, right? Crazy. Right here is your resistance. And we actually breached the lows, but then quickly, right? Quickly, again, Thursday morning, we're still before the tweet, we're not able to push down lower. When I said the price action, we go back to the technicals, the internals. Internals were all saying this should be a death blow from the Bears. The Bears had every potential opportunity to make this a major death blow right into the 200-week simple moving averages. And that was there for the taking. It was ready to roll. But for whatever reason, they weren't pulling the trigger, right? And then lo and behold, we get the tweet Wednesday, which happens to go up. But look at this retest. This retest is really clean, right? Whereas on SPY, when we were looking for SPY to kind of like hold the highs early, you got a big pullback inside of Friday's high, almost actually that day, almost went to the lows. Qs, not really even close. Same kind of exercise though. If I took this from that low to the high, again, is it right into kind of like this golden pocket retrace? It is. So this is structurally optimistic from a technical perspective. And then yet again on Friday, right? On Friday, you hit this, and this is as clean gets, right? So, and I posted on Friday. Where's Friday's post? Post Friday, right? TA says long, right? But in this environment, you can be in the trade for all the right reasons, and tweet comes out and poof, right? So technicals saying this is as good as it gets from a technical reversal signal, period, full stop, right? So that is a if I ever had an A plus technical reversal setup, that's what it was, solidified on Friday. And we are still in um we are still in that same setup. So the question is like, all right, well, how far do we go? I think that we can still go to the scene of the crime for Qs. That's just over 480. So Terra 4 starts 480 on QQQ right in here. We will likely get the here if the trajectory stays the same. It's possible that we get all the way up into just over 490 because this March candle right here, look, we lose the April, we get over April NFP highs. We should in at least this month start making this trajectory back into those March levels. At that point, you do need to put on a little bit of protection. Let me see what this looks like because then we're back to where we started from the trade war. I'm gonna add some NFP levels, and it just goes like literally that that clean. So 490, just under 490 on QQQ is your upside target. Within the next week or so, 500 is in the cards. But again, at 500, that's really where I want to put some actual protection back on right in here. And so this is all of this. The higher that we go, the more protection I'd like and the more time I can buy on the protection. Because if we do revert to the mean, so to speak, go back to where we came from a chart perspective, volatility will be back down and things won't be as expensive. They'll still be expensive because of how we got here. So that's not going away for a little bit. I think that's a slow burn. But if we can get back to here, I think you could actually see a VIX back into the 20s one more time. And again, that's about where I would that is where I would actually be a little bit more concerned about continuing this current trajectory. So just under four, just around 493 for that first level on Qs, just about the 50-day and 200-day simple moving average. Can we overshoot that to? It sounds crazy, but can we shoot that to like overshoot that to like 510s? We can. And again, at that point, I think you would be remiss to think that we're actually out of the weeds because when we get there, again, from a technical perspective, we've actually done just too much damage to think that we're just going to blow through the highs and get there. It's going to set up a pretty bearish technical setup where you're going to have a big higher low um, moment. If we can get all the way up here, you're going to get a big higher low. And the bears might get overzealous looking for a lower low from there. But best case scenario is that you get something like this and then you come down and that one of those prior resistance levels, which is probably right here, ends up acting as support like this. And you go sideways for a while before making your next directional move. Because at that point, we don't really know. So this is what it looks like from a technical perspective. Assuming that we can hold Friday's highs, we should make that trajectory back into the 490s. But you need to take measures at that point on QQQ because we will lock in a lower high from a count perspective, and the bears are still going to be out there, right? So that's where I'm at for the week, and for the month. So that's going to stay true for the entire month. That's how you use these non-farm payrolls, and then by May, we'll have actually new levels to get there. All right. What was the head? Did we just get a headline? Looks like it was kind of like retrace.
It's Fed Waller is making a lot of comments here. Recession risk would outweigh risk of higher inflation. He gave a 5% inflation target if 25% tariffs go on. Like
Yeah.
He's talking about all tariffs and maybe the Fed cutting reactively based on some scenarios. That's where you're getting some of this volatility right now.
Some people are on the, Fed's gonna cut. I don't think they have to here. Um, I kind of take the Fed at their word. But this is diamonds, right? So diamonds, again, exactly what we're talking about. So I have 3 out of the 4 majors creating that textbook A plus reversals like setup. Even the redheaded stepchild of the market, IWM, which was the weakest out of the gate. But take a look at this. When we looked at that, when we did that exercise across the board, what do we need to see SPY really hold? If this isn't like a picture perfect retest holding of support after a breakout, that support holds true, right? So for now on IWM, it's 176, call it 177. I think is even though this is not a lot of time that's been spent here, how I come up with these levels are extremely like it's a fundamental level, a fundamental event that created these technical levels. These are extremely strong. These are strong support and resistance levels. These are not weak, even though it's been here for maybe a week. Nobody else could really tell you that, but I'm telling you that right now. So what do you want to see IWM here, who's been the biggest laggard of the group? You want same story, right? You want to see, and this is another picture perfect retest, right? If this can hold here, look, that's pretty bullish. So far I have 4 of 4 major indices giving me a textbook reversal setup across the board. Dude, the technicals say this is a long. All I can say is, look, there's still a scenario out there where if something happens, maybe another calamity arises, that's going to change your technical view very quickly. But without that, and assuming we don't have any more, new black swan events, the technicals are saying to buy this dip hand over fist, and to stay bearish. What they're saying, what the technicals saying, is that if you were to stay bearish, that could potentially be a very grave mistake, which is probably not what you were thinking to hear from me. But that is what it was, right? So the technicals, bears had every reason, every piece of ammo they needed early in the week to press it lower. They failed to do so. And we did get a little bit of a relief, bit of a relief bounce that is now stabilizing here. Again, holding Friday's highs. It could be a mistake to not try to challenge that bearish sentiment, if that makes sense. And we've been bearish, honestly, since February, and now this is the first moment that we're getting that we could get a pretty large technical rebound. And yes, we're below the 200-day simple moving average. I don't care about our position of where we are on that or not, above or below. To me, doesn't really matter. I like to take a higher low below that simple moving average, which definitively would have been actually Wednesday morning in the pre-market, and then another one Thursday, and another one today if this low is higher than Friday, right? So every day, higher low, higher low, higher low, higher low. We're yet to lock in another higher high, which would look like 565 on SPY. And again, I would still be looking for another higher low. But that could happen all this. So we can get a bounce into the week, 565 would be upside target, and still that's like 40 points away, right? But near term, as long as we're holding this general structure, we are good. And if we can officially hold, I'd say 547 or so, that would be extremely bullish moving forward. And that's what most of your chart technicians will be looking at. They're going to be looking at this 545 level right here, or this last breakdown, and also Wednesday's high. So if we can get a higher high, that's all it takes. Entering again on the next higher low. Not so it's still not take the breakout. So bull markets, you buy the breakout, right? You can buy the breakout. It's not a bull market yet, right? It's not even close to a bull market here. So what that means is not chase the rally, not buy into, don't wait till it's like bright green. You don't want to buy into that. But can you start to think about buying at support? I think you can. And as long as we slowly chop to the upside, that's honestly a better case scenario. All right, I'm gonna move
There
on.
was a earthquake just now in San Diego area, and people up into LA felt it as well.
Nice. All right, so I'm gonna take a look at some tickers. I saw some go into the chat. I think some of these first questions. So, is NVIDIA out of the woods? I mean, so again, you can actually apply that same scenario to everything, right? Um, NVIDIA was out of the woods when it was over $100, right? And what's funny is like you can take this setup, same exact thing I was looking at. Here's Friday high, Friday low. Look at NVIDIA's bounce here, 92 in Tuesday's aftermarket. It's been out of the weeds. NVIDIA is actually at this point all the way back up to that first resistance level that I was looking to get to on SPY. Believe it or not, NVIDIA is already there. So the thing is, though, if you're trying to chase NVIDIA here, again, not something I'd expect to see explode. At least not until it's over 115 comfortably. Then over 115, you could actually get like a rocket ship to 130s, low, like high 127s, and fill this larger gap in right in here. But that really has to be a resolution of that trade war scenario. So again, NVIDIA has been out of the woods since it reclaimed 92, and this pullback didn't even get to Friday's high, but where we are here, it's $100 is your like big dip level. This becomes support if you want to do like a little bit riskier dip buy. It's more around that 107.50 level. But what you don't, again, what this market is not, it's not a buy the rip unless you're day trading. If you're day trading, meaning your trades are literally for hours, not multiple days, intraday trades, you can, and you'll see it happening live. But unless you have closes over multiple daily closes over 113.50, is not happening, right? And so this is currently your resistance level right here, 113.50. Again, having retraced a lot of the trade war uncertainty very quickly. So I think people forget like how far, I've already forgotten how far NVIDIA's come in such a short period of time. It's already up to the point where I was looking for SPY to get to. But in general, yeah, you still have your slow, like your channel up. I think it is more of a continue to see higher lows form. This is technically a bit of a double top, so it's not breaking out of this structure just yet. Again, daily closes over 113 and change, 113.50 would be good. This happens to be that 115 level I was talking about. That was the prior breakdown level. It is a big technical resistance area. Actually goes up to 116 and change. But yeah, this it's gotta have closes over 113 and a half. So if you're getting daily closes over 113 and a half, that's good. Will it be choppy in this moment? Yeah, this is a choppy setup, but I think it is accumulation mode as close to 100 as you can on NVIDIA. Assuming that everything else stays out of danger, right? Again, we get a bond market Armageddon moment, we can go lower, and we can go to the 50 level, right? Like it's very possible. So again, it's none of that is out of the cards. I think I was pretty bearish on Tuesday or Monday, one of those days. Look, I wouldn't take anything back of what I said. I think, had we, like I said, had the market completely fallen apart, if we got the, potential Armageddon implosion of the bond market on top of the trade war, all of this would have been very possible. And if any new kind of like black swan event happens, it's still possible. But in the meantime, if I'm going level to level, look, I think that a lot of the trade war was priced in. Near term capitulation lows. $50 is not happening unless we're below 92. And if we are below 92, it's very much a real scenario. But we're not there yet. All right. Okay. Let me just go. Jamie Dimon is one of the best. Yes. Can you go over whether
Jason, you make anything out of these crazy IPOs? I saw Hood pop up on the screen.
the new one
Obviously, Weeble's still going absolutely
is
insane.
it
A bunch of these, yeah, dude.
75? Wow.
Yeah,
I don't know.
this is the third one we've seen in like a week and a half
I
that's just
don't like
absolutely
that.
flown.
Right. I mean, Weeble. Okay. I don't know what the market cap is on Weeble now. It's no Robinhood though, guys, but it is a really good for active trading. Um,
It is Chinese as well. We
it is
should throw that out there.
so they listed it right before they get delisted because that would be the next negotiation would be for like Chinese ADRs to get delisted. All right, someone asked for Hood. So again, if so I already sold those 38 cash secured puts. Look, I don't trade Robinhood a whole lot, right? And I think my puts are going to expire worthless. I think it's at 43. I think they expire this Friday. I sold them for like $5. They're like $25 right now. So I think those get sold away. I sold them and the stock went to 33. It went to 30 and I had already sold them. I don't know what to say. And they were looking like they could get they were ugly for a while, but 38 was kind of like my level. We're like, all right, I, selling the 38 puts at $5, getting a $5 credit for them. I think I sold them over here is when I sold them. Yeah, I sold the 38 puts over here and it looked okay. And then it looked really bad. And now they look like they're going to expire worthless. I'm not, I never sold upside calls aside from the January 2026 $100 calls. Those are only $1.50 right now. I don't think they're worth selling here at all. I don't want to sell covered calls just yet. It's just one that Kramer says about Apple, trade it. Don't just own it, don't trade it. I just own it, man. I don't really trade it that much. I see it, but the stock's not at a high enough dollar amount for me to like really get excited about trading it. Not until you're like over $100. And some of these moves are really wild. But if I would be looking at like 55s, right? Because the upside move on Hood. So Robinhood's already pulled back all of the trade war shenanigans. So Robinhood, get this, Robinhood and your fintechs were some of the first to bottom out real early. $30, sub $30 on that Monday low. Is that wild? And held the lows, barely tested, huge bounce, and actually was very far away. Never even really got the 36 kind of level to test. So again, I think that if you can get like $35 puts sold for more than a buck or so, a couple bucks, I think that's good from a cash secured perspective. Again, the hard part is that look, if all hell breaks loose, this is 25 and it's probably below 25. So that's where it is. I think upside calls in like the 50s, 55 range for like 45 days, like probably like May's. Yeah, I would rather sell a May $55 call, collect a $1.20 than selling a January $100 call, collecting about the same in this moment. But in downside, I think you could stick with that 38 nearer term. So that's just me. 38 has been the level. It comes it's really from over here. So this is the 38 moment, like right in this area that I was looking for it to hold support at. This looks choppy, right? And so, near term, I'm not into a super short dated. I hate wheeling stocks that I want to own. That puts me in a lot of, I hate that. I do not do that. It just gets me in a lot of trouble, especially if I get underwater on some kind of cover call. No, I'd rather not. So I'll sell puts, but I'd need to see it under 40 to get interested in selling some cash secured puts again. 43 is not, it's too much gamma risk, like too much, like your negative gamma, meaning like if you go down, you sell a put at 40 or it's 43, you sell some $40 puts, like the probability of this, if it cracks 40 to get into 37 is pretty easy, pretty high. So I think this red box is kind of like, we'll call this support for now. And then this $50, this box up here.
So would you sell puts down there, paper, looking to like maybe this is an area I want to own some more?
I just think you're late to that game. Like I just think you're
Okay.
decisively late. Like I did it already, like a long time ago, and I said, I don't know, maybe 100 times that I did it. And I don't want to continue to depress that bet until I see another really good opportunity. It's not that often that I do it. But I did it, and I do it when it's like really uncomfortable. Like that's when I do it. Like I do it when it's really uncomfortable. But yeah, that's that's just what it is, right? I think again, your support is going to be in that 37.50s, just around the 38 area. So if I saw it here, yeah, I think I would, but
That's my cost basis now.
yeah, it's hard. It's hard, right? This one is, dude, this is way higher beta than I was. This is very high beta. But fintech usually bottoms first anyways, and hopefully that was kind of like the first, at least near term, this should serve as the bottom. And again, holding $40 I think is constructive, but even if I pull this over, like this is where you are, right? So you're not quite out of the weeds. 47s is that first, 48 is that first overhead resistance level. But again, if we have a big bounce, that resistance level, it's a wide margin. It's like 47 to 52 ish. So it's possible that you get up there, which is why I would be selling on the higher side of that. Let's see. Yeah, so we covered NVIDIA already. So SPY death cross today. This is laughable. It's an accurate comment. SPY is going to make I know this is laughable. SPY is going today to make a death cross. Is that funny? It's funny to me. It's only funny because like it's probably one of the worst technical indicators aside from RSI. The death cross is like, it doesn't work. Like it doesn't work. When was the last death cross? Is death cross?
That's what I was gonna tell you.
This
I was
was a
gonna tell
death
you, don't
cross,
pull up that
actually.
last death cross and look at the rally that happened later.
Yeah, so this is death cross.
Yeah.
Literally 2022 death cross was the low. So what a death cross is, that's when the 50-day simple moving average crosses below the 200-day simple moving average. This is the most lagging indicator that you can possibly find. like definitively. I'll make this a little bit thicker. Laughable. So this is the day that they crossed. Look at where the low is right here. I mean, look. Literally that day ensues a face ripping 11% rally on SPY. Is that wild? That's wild. What it should warn you of is this potential move, right? Later. Like that. But the day and the event itself, no. It is complete and utter nonsense. Even in a definitive 2022 bear market, not good. Here is another one. Look at this. The most lagging technical indicator the death cross. What happened from that day? You get a small blip on the radar, but a 23% rally over 2 months from the moment that SPY has a death cross. So if anybody's out there saying death cross is bad, unfollow. Unfollow. But that's my thoughts. And I think it's a good thing because people will talk. You're going to hear about this. You're going to hear about this a lot, right?
There'll be a lot of tweets on this today.
A lot of tweets, right? So, unpopular opinion, hot take, death cross is a buy signal. There you have it. Let me see. I think we're good, right? I'm just scrolling. I'm catching up.
There was a comment there about the Fed rate for May. It's 80% chance of a hold. I just pulled it up and took a look. 80% chance of a hold for the May 7th meeting.
Yeah. I will talk about this one. So Keg's asking about TLT. And so TLT is the volatility of TLT is pretty high right now. And I don't know that buying time is going to help a whole lot with that. The only way to hedge volatility is to use spreads like multi-leg option chains. And I think that is a good thing here. So let me be clear. I don't think that this is not actual COVID, right? So actual COVID was funny. They have this, how many terms have you heard like this is a once in a lifetime moment? I'm like
Generational.
generational dip
Generational.
buying opportunity. Dude, I laugh at that. I have seen in the last 7 years multiple, like 2022 generational buying opportunity, COVID generational buying opportunity, fight like soft bet. Oh my god, what was the bank? The bank that collapsed. Like US debt downgrade, generational buying opportunity. Dude, the term generational buying opportunity has lost all meaning to me. So, um, so yeah, me and every other millennial out there. But regarding TLT, to think that we're gonna go back and see like something like 177, what have you, I think that's not right. Right. This is literal 0% interest. We're not going to 0% interest, right? So I want to get that off the table, right? If you're going for where do we want? We want so the Fed wants neutral. So you want to end neutral in terms of rates, right? What neutral means is that the yields equal the CPI, equal inflation. So, and when I say yields, I'm talking about two-year yields. So if you have a 3% inflation target right now, give or take, that means that's 3% on the 2-year yield. You really can't be looking for something crazy on TLT, right? So I think that the bounce for TLT is 92. I don't think it's 95. I definitely don't think it's 98. I think you could get to 92 real quickly, but this is not a big mover. I don't think that you even get close to 103s. And if you do, that's when you need to exit stage left because the range that TLT is trading in, the maximum upside is 102, 103 maximum. And you have hit your downside. So here's your range 102, 103. Your midpoint is like 93s, 92 and a half. And I think that it's possible that you get there and then you stall out. So my point here is probably doing something like long dated 90, 95 calls and selling shorter dated 90, 95 calls to offset the volatility. I think that would be the play. It's kind of like a poor man's cover call. In that instance, you could even stagger them. If let's say you sell like $100 calls near dated and buy like $90 calls further dated. But if you try and nail, my caution here is that if you try and nail this $100 level, buying a lot of time, I'm really not sure that you're going to make any money by the time we actually get there because decay is going to hit you. All right. So that's my sense. That's my 2 cents on TLT. Junior quick time. I think we're good, dude. I think we're good. I will be on. I will be on. Look at this. It's now generational debt. I'm not. I'm a millennial, man. Come on, dude. I'm a millennial. Yeah, and it was
Millennials.
Silicon Valley Bank. Thank you, thank you, thank you, Annie. It was SVB. Analyzer wants Baba. We'll take a look at that in the server. Palantir. I think here's one that kind of fell apart, kind of didn't. Last one I'll look at. But you're at resistance. Can you have like a blow off into the hundreds? I can't. You can, but this was getting really ugly. That retest is exactly like from a chart perspective, dude. That 90 something dollar retest. That's where again I would have been very happily hedged, and happy to see those hedges go to zero. Still would be. I think you maybe need a little bit more time, but this one, it had like 1 day, 2 days of like extreme pain to 65s, but it could have gotten a lot worse. Oddly enough, the market didn't sell this off. I wouldn't. It's not out of the weeds because you're right here, 98s. So you're right at that. Actually, Palantir might be in a short zone. You're gonna hate me saying that, but it's not. It's not out of the weeds. This is your max pain on shorts on Palantir right here. This is, quite frankly, this is where you do take measures, and maybe sell some like very high upside calls. You could sell 125 upside calls for further out, like that would be probably good. But you are not over that. It's 97, this last high. You're not out of the weeds. It could go a little bit higher, 100. You got a psychological level, but this is stuck sideways. So this one, I think you can do some upside selling of calls in this instance. But because of the environment we're in, I'm still not into the income generating like upside calls. I'm more into like, what can I sell that's gonna give me some actual protection? And last time it was more like $100 calls for January. And those are trading for $20 right now. So if you sold those, if you sold $100 calls for January in Palantir, you would collect a little over $20, which puts you with an exit price about 120, which is right over here. 120, that would be your exit price. So you'd be getting an exit potentially at the highs. If it does fall, it's giving you protection $20 lower, which is the lows. So now again is exactly the moment where, look, I think this is a good opportunity to do something for Palantir, even though it's a great day today. But this, if you sold upside calls, you would get this exit price and or this kind of downside protection. Selling some longer dated stuff, I like that. And potentially you can roll, but that is sound protection on Palantir. It's not like it is in short zone territory. I would say that.
It's in the box.
It's in the box. It's at the top of the box, no less. Which, when I say short zone territory, look at the last time that Palantir was exactly at this price, and people are they're just so tied up on looking at my P&L to manage my trades. Like, dude, it's like the last thing you look at. The last time it was at this price, in 11 days, it fell 33%. Not saying it's going to happen again, but if you rewound the clock at $97, had you put some kind of protection on last time, you'd be really happy. You're back. You get a second chance. What do you want to do? It's not a sell by any. I don't think anything's a sell. I think it's all a dip buy. But if this can hold low 80s, that's ideal. But and again, maybe there's news. I know they just got a contract recently, but it was What was the contract with? Oh, Arnie posted it. Here you go. Arnie posted. Arnie's very bullish. That's not really fair. There's this is a new defense contract. I think I read it was like, it wasn't huge. It was like 100 something million or I don't know. This is different, but I know they got a new contract today. Anyways, that's where I'm at, guys. I'm gonna call it. It's bullish. I don't think you want to get caught in a bear trap. But again, I'm still not opposed to having some like very cheap protection to against NATO contract. Thank you, guys. NATO contract. This is wild. 2 days after IPO is now the same as, oh, dude, let me short that. No, we will. No. My trades, I didn't give you a trade yet, but I'm actually really looking at the silver potential catch up. Miss Cleo has a silver theme this week. I'm long silver. I had to cut my shorts on gold. I don't, we still want to watch gold. Here's the caution. Caution is, dude, gold is not coming down. It's not freaking coming down. It should today, for example, gold should have been like face planting, right? If the market was just gonna completely roar to the upside. It's not, right? So again, my sentiment is not to get over your skis. GDX as a sector, which is the gold miners, massive move. This is weekly chart. This is a breakout. Listen, this is a huge breakout on the entire sector of GDX. Big old cup. This is what the gold chart looked like a year ago. Finally, the gold miners are starting to catch up. So I think this is in play. I'm long some GDX calls. And I think if you want a place that could potentially catch up, SLV silver, I'm long some 31 calls. I might actually add to those today because this looks good. That is over its 200-day.
They're in the comments are talking about NATO. There was a Palantir story where there was
Yeah,
a
that was the
partnership with
contract.
NATO.
It was the NATO
Just making
contract.
sure that I don't know if we threw that out loud on the stream, but did want to point that out.
Am I blue pill, red pill, or hood pill, man? I mean, dude, I don't think you do any. Yields are high,
I
gold
took the
all-time
gold
high,
pill.
dollar coming down. Oh yeah, definitively something is off, right? But this is kind of like what I'm pointing to. I think, if you thought it was all safe sailing, clear skies from here, from an equity perspective, I don't think that's a clean bet, right? We're not seeing gold like pull back. The safety trade, the dollar is way down, but again, this has a lot to do with the yields. We just talked about it. It's Jamie Dimon having to call the White House to prevent the bond market apocalypse. I bought SVIX. I think shorting the VIX is or doing some kind of credit spreads on the VIX is probably fine. Near term. Yeah. The setup is bullish. That's what it is. The setup is actually is A plus reversal setup at the index level. But again, we could get that little tweet that changes everything. So you have to stay on your toes, take it one day at a time to think that we're gonna get like this huge green, like epic candle of all candles to the new all-time highs like this month because the trade war is off. I think that would be a mistake. And I do think, look, the market has trust issues now. Market has trust issues. So best case scenario, we kind of chill and we slowly trudge higher. But again, the closer you get to those highs, the more caution the market's going to have. And I think it's prudent to have as well. So, um,
Trust issues and news exhaustion, I think, at the same time, like both sides of the map here.
yes,
People are just tired of this.
I oh, $10 SFIS calls. I mean, did you buy calls? That's crazy. He wants the crazy candles. Listen, I'll tell you, this should be the long of the year. It should be the long of the year. But because the market's very interesting right now, I don't know that it's happening today. Um, yeah, I'm still long SFIX. Still, it's up 7.5% today. But all right, that's it for me today, guys. Last note, I did want to say I did post something earlier. Our buddy Nick, Futbucker, who's a friend of the show, a friend of a couple shows. His daughter Kate was in the hospital last year about this time, and I did contribute. They're going out on Saturday. He's out busy. He's literally fighting fires as we speak. I was trying to catch him earlier, and because we were talking about silver, it's funny. And he goes, "I'm a little busy right now." He's out there fighting fires. He's fighting the good fight. Still finds time to go out and do these kind of things right now. And so Saturday they're going out to Winthrop Hospital. So I contributed. They're doing this thing. Hospital stay can't keep the Easter Bunny away. And it's just like a little fundraiser, like Walmart. Buy some Walmart gifts and stuff. But you can see his post. Look at Kate. She's too cute, man. But this is her at the hospital last year. So they're going back to give back. I just thought it'd be cool. Good Friday. On Friday, markets are closed. It's a decent setup. It is an A+ swing setup. So be cautious. Yeah, Friday. AMD is looking out of here. All right, guys. I love you all. Emp, you rock, dude. You've hung out the whole time. Guys, it's a little man's first Easter this coming weekend. You guys, do you have what was that? How'd you do that? Oh, is that nice? Nice. Spend some time with the family. That's it.
Oh, my youngest son,
Yeah.
so, like, the schools here are out for 2 weeks.
What?
My older son normally goes to school because they do their, like, spring break is 2 weeks for Semana Santa, which is like Easter,
Oh, geez.
and my younger son, my 2-year-old, went with him to, like, a daycare school for these 2 weeks, and it was his first day. He went today, didn't even say bye to mom, just boom,
Wow.
straight in.
Oh,
Mom came home
did
crying.
you
It
did
was,
you did
it was
you
a whole scene.
did you get a little heartbreak too? I don't
Not really, because I wasn't there to see it,
but
like,
still.
I was there when my son went for the first day, my older son,
Yeah.
I was like, "That was a tough day."
Yeah.
Like, it really was, like, it hits you. You're like, "No, he's big now, like, what's going on
Yeah.
here?"
Love did not like what you
Oh, chills.
Oh, Jill. I like the show. I like the show. It's a guilty pleasure. She doesn't like it's my guilty pleasure. But all right, guys. I'm out of here. I love y'all. I'll see you on the next one. Peace out.